Hello, and welcome to the Cryptocurrency News Channel. This is going to be kind of a recap of what we talked about in the second stream. Talk about why Bitcoin's not as risky as some people actually think, and why some people might actually pull into that because of it. Right now, longs right now outnumber shorts, and why the Fed cutting rates might actually get people into more crypto. So right now, Bitcoin's not actually as risky as an asset as some people think. Many people view cryptocurrency as a hyper volatile asset class and treat it that way as more of gambling. And for most of cryptocurrency, it is that way. But for like Bitcoin, which is the index, yes, it can fluctuate a lot, but generally it's fairly safe. I don't think it's suddenly going to zero at any time soon. So I don't think it's reasonable to actually treat it as a penny stock. It has survived for 10 years now. And because it survived for 10 years, there's a lot of financial institutions supporting it, a lot of financial institutions that are invested. There's a lot of big players that are invested, and I don't think it's just going to drop. The likelihood of everyone trying to sell at the same time is pretty low, especially with all the mining support. So while it isn't like a triple A blue chip stock, definitely the same thing as a triple A blue chip stock, it is in the safer realm of investments. It's just one with a lot of volatility. But the thing is, the volatility of Bitcoin doesn't follow the market. So it's not like if the stock market goes up, Bitcoin goes up. If the stock market goes down, Bitcoin goes down. It's not like today, like the stock market went down and Bitcoin still went up. So there's very little correlation, and that actually makes it very attractive as an individual, independent asset class to actually invest in. Um, I think for people that are trying to hedge out risk, it's actually more attractive than all the other cryptos because it is the index crypto and everything tends to follow Bitcoin instead of Bitcoin tending to follow everything else. But it moves independently of the stock market. So when stocks are crashing, besides like gold and other stuff, people might actually look at Bitcoin as kind of like another category hedge, and they actually might want to buy in Bitcoin because it's not correlated with the stock market. So it's not so those two things make it really attractive. It's not as risky as some of the other smaller cryptos, and it doesn't move with the stock market, meaning that it's kind of almost like a stable hedge. Well, it's not really a hedge. It's like a stable asset. Well, it's not a okay. I'm just explaining. It's not really a stable asset, meaning it's an independent asset that doesn't move with the S&P or the Dow. So when the S&P and the Dow are falling, you could look at it as a more stable option. You could also look at gold that way, but if you want to diversify your assets, I think cryptocurrency is getting to be more and more of an attractive asset for people to actually really look at it, especially the big investors. So while it does carry a lot of risk, it has a lot of qualities that would actually make the big players actually want to jump in, and I think big players are going to notice and jump in soon. Right now, the market is decidedly somewhat bullish. Right now, the longs outnumber the shorts by about 2.2 to 1. And that means people generally think Bitcoin's going to go up in the short term. I don't know about the mid and the long term. I'm going to guess it's going to go up in the mid and the long term as well. But in the short term, longs highly outnumber shorts, which means people are generally fairly bullish on Bitcoin right now. So take note of that. The third thing about the Fed cutting rates, that's actually sort of bullish for cryptocurrency and especially DeFi. Because when you cut rates, it's already at like 1% right now. That means banks' interest rates are pretty much going to be nothing. And so you can't just leave your money in the bank. So where are you going to put it? You can put it in gold or stocks, but the stock market's really bad right now. And if you will, and You can't really get interest from the bank. So people actually might look to DeFi. Now, there's about $1 billion locked up in DeFi right now. And I think that number will definitely increase as more Ethereum gets locked into DeFi, which would actually result in a increase in Ethereum. And I think like Ethereum basically has to increase for DeFi to really increase, and I think it will. So the high yields in DeFi of like 15 to 20% are going to look more and more attractive as the Fed cuts rates lower and lower. If the Fed funds rate was at like 5% and there was a decent interest in the bank and CDs, I don't think people would really look out as much because they see that as a safe, stable investment, and it is a fairly safe and stable investment. But if they actually do CDs right now, they're not gaining anything, and they don't want their money to not gain any more money. So they might be willing to take more risk and lock up more money in DeFi to earn that high yield. Now, if those yields like 15 to 20%, I mean, you're looking at like almost 0% interest versus 15 to 20% on a yield. Even though DeFi has some risks, I think like they will actually take a gamble on things like Maker, because I think Maker is actually more stable than the other DeFi projects. So the Fed actually cutting interest rates more and more, making bank interest not a thing anymore. People are going to go out and look for more sources of interest, more sources of like passive income. And they might head right into DeFi if they really research it. So that's actually like the Fed cutting rates. It's really bad for the economy, but it actually might be pretty good for DeFi. And that's the news I have for today. Let me know what you think, like and subscribe, and hit that bell notifications button. Thank you and have a nice day.